by Raj Krishnamurthy. He wants to know, like one buys equity mutual fund units as market dips, what is the best time to invest in debt mutual funds?
You don't really need to time your investment in debt mutual fund. When investing in debt mutual fund, you can well invest lump sum. Ensure that that fund is safe enough. It is invested in securities which is safe enough, and you are choosing the appropriate kind depending on the time frame that you have. There are many investors who invest in fixed income for the long term, debt funds for the long term. But if his first assumption that one should be buying equity on dips, it's well said, and it looks nice, but it's very difficult to do it. You don't know whether this dip is the final dip, and it will not dip further, or this dip is a temporary one, or it will linger. So I would say that most investors should implement some kind of disciplined strategy. You are investing X amount every month. Maybe have some kind of allocation for trying to target the dip. But because if you miss that, because the biggest risk which comes with trying to look for that dip is that you will miss some of the big moves. And most big moves happen when you least expect it. The big declines, they come with as a surprise. And the big up moves also come with a surprise. In fact, people should take note of that the biggest gain that we have seen in recent times was from the low of March 2020. And market went ballistic while nobody expected it to. So, and everybody was in awe and surprise of that big surge that happened. And it is always like that. You will have the big declines coming for a brief period, and you will have the big surge that will happen. And that is when most investors who are waiting on the sidelines, waiting for that dip, actually miss out.
Yeah.